So it is 21st, and this is the weekly chart for gold and how we are going to trade it the coming week. So what you have here, or what we do here, is not just content, it is basically a trading plan that is done before the market actually plays out. So we analyze before the actual play out and then when the market plays out. So if you come to Throne YouTube, you realize all of these other trades, these including the last two, why we're still bearish on BTC and how it played out, goal entry and all of that, they are usually released before the market actually plays out. So right now, let's focus on gold. And I just want to show you an entry we had based on this gold trade, which is the analysis we did 8 days ago. 1, 2, 3, the third video. 8 days ago, we broke down gold and then plays out today around yesterday around here. This buy is here. We have also explained it in the video. So, and we're still holding it long term. But then also how we would like to trade it this week is what we're going to break down. So this is gold on the weekly. And the first thing I want you to notice here, mark your highs and your visible lows. So this is our all-time highs, which is 5,600. Okay. So now from here, we want to see the lows. What lows do you see from here? Of course, the most obvious visible low is this one here. So you can also mark it. And then let's come up here. You look at these lows here. You also mark them. Now, what this tells you is that the market has a wick, which will eventually be filled with time. And there was a wick to the downside, which may be filled also eventually with time. But right now, which wick wants to be filled first? Is it the downer one or the upper one? Given the fact that the market came back down here to this low and then pulled back up, is an indication that the market wants to fill the upper wick first. And that can only happen if the market breaks this weekly resistance. You see this weekly resistance? Let me just mark this double. Because we have a wick here, these are highs. The same way these are lows. So based on the weekly, the market is in a range and it looks like it will break above. So if you're going to trade throughout the week, you want to trade when the market is around here, above here, with clear structure. Or else that is for buys. And then if you're going to sell, you want to sell when the market is below here with clear structure. So you don't want to find yourself in trades here unless you're on the lower time frame. So these are the two areas. So now let's observe how price is actually playing out in between these areas before we can even think about market coming to all-time highs or to these other lows here. Of course, we know the market is bullish right now. And why do we say it is bullish? Because if you've been noticing, the market is breaking highs, these highs, and then it's also breaking these highs, and it's breaking these highs. So the highs are being broken and the lows are not being broken. So we're bullish. So once you have these broken down, you can switch to a lower time frame, which would be the daily. So I want to show you something on the daily. So on the daily time frame, you can clearly see why price, let me just remove this. You can see clearly why price has actually stalled around this area for a while, because if you observe this, this is what we call our price difference. And if you're not familiar with this concept, there are several videos about price difference here. You just come to Throne Trades and then look for price difference where I've explained them. So the concept of price difference is basically where you have the market giving you, when you have a particular high and then a new lower low. So and then you find the difference between that particular high and that new low with a strong candle break. So the difference would be here, because this candle here, this was the low. This is the low in between this low and then this low, this high. So you find out what is between the high and the low. So this is this low. This low becomes a price difference. And price difference is actually where we get a price difference to the downside. When the market pulls back into that, that is where we get resistance. Then a price difference to the upside, when the market breaks it and comes back, that is where we get support. So the origins of supports and resistance is usually from price differences. Okay, so the origin of this support here to pull price up is from this price difference. The origin of this resistance to bring price down is from this price difference. So price differences are the origins of supports and resistance. Other origins of supports and resistance are all-time highs or all-time lows. So once you have clearly this mapped out, we now know why gold was actually ranging around this area for a while. But I want you to observe what this range has actually created. So from this range here, you see, this is a resistance area. Gold has failed to break once, and then maybe twice, and then this is the third time now. Meaning this resistance is actually becoming weaker because once it is being tested, once you push a very strong force against the wall, more than twice, there is a higher chance that the wall will break. So this is the same thing, and there is a higher chance that this will break. So we could, if it breaks, we could head up back. But how do we want to enter and have entries? Let me now come to H4, and then I explain to you how we got this entry here. Okay, and then we are going to also use the same knowledge for this entry, that this buy that we are holding, to be able to explain the next entry that we can get. So you can clearly tell you have your resistance area around here. So you want to trade when the market is out of this range. But I want you to observe this. So the reason why we're bullish on this is because you've seen this low here. After the market got resisted here, comes down to form a lower low. Okay, these are lows. The market breaks them, forms a lower low, and then pulls back because of this price difference. Also comes back down to complete this low. So this down becomes a double bottom, where you have a low and then a lower low, and the market could not a low. The market could not break above, and then from here we begin to see market breaking highs. So the market breaks this high to form a higher high. So the moment we had a higher high here, and then the market pulls back down here, it doesn't reach these lows, meaning, and then comes up to form another higher high. So here we're seeing a scenario where the market was constantly breaking the highs and then failing to reach the lows. So this is where we had our entries now on the 1 hour time frame. So our entries were around here because these lows here was not being broken and the market was. So this is exactly where we had our entries. So let me explain it to you here. These are the entries. You can see them. One is at 49,065 and then the other one was 49,077. These are the entries. Now, that is how we entered these gold buys. And now we've broken even. We want to see how far gold is going to go. So the other thing I want you to observe here is that we've had a scenario where we have broken highs. So this high, we've broken above it. And then this is the wick. This is like an FU candle. This candle where you just see a long wick, just comes, wicks, and then pulls back. But we are above these highs here. So now the trading scenario here is that when we are going to, as long as we don't come below this, if we come below this and pull back, then we can actually have a buy here. But the best position to be able to buy is when market is above this area here. So how do you want to enter a trade when the market is above this area? So what you want to see is a scenario where the market pulls back, here breaks this high, then pulls down and then breaks another high. So the moment you begin to see price breaking higher highs here, then you can market breaking highs and failing to reach the lows, then we can look for that buy to take us to all-time highs. But don't forget, this is an area where the market could also react. Okay, market could react there because we have a price difference here. Let me just explain to you here what I mean by that. You see this high, the difference between this high and this lower low was actually here. And when the market returned into this area, that is where it reverses to come to the lows here. So when price return to this, there will be a reaction around here. There will be a reaction around here. So the first thing you need to do before we can think about this is where these are potential profit-taking areas. So this is how we're going to trade gold throughout the week. So let's just see how it plays out. We've broken down our entry and how we're going to trade the next coming days. So the most important thing you do now is to be patient and see how the market is actually going to play out according to what you already know. So you are not forcing the market to do what you want it to do, but you know what it will do, and then you position yourself. So let's see how gold plays out.